It has been AI overload this week for investors, from OpenAI reportedly nearing an IPO filing to SpaceX casually disclosing in its IPO that Anthropic pays it $1.25 billion monthly for AI compute. The news flow has been supportive of more enthusiasm on tech stocks. But the reality is that NVIDIA's midweek earnings were the AI star of the week. The earnings delivered, and so did the guidance. The report made me think, again, which is the best chip stock to own. You have still NVIDIA rocking and now doling out a fatter dividend. AMD is growing rapidly in the number 2 position. And suddenly, Intel has one of the hottest stocks in the market after being left completely for dead in 2025. Government backing sure has its perks. Still with me, Lee Munson, Inez Ferre, Jared Bookery. Lee, your choice.
It's got to be NVIDIA. Bottom line, they've got the whole stack. They've got CUDA, they got the chips, they got the entire ecosystem. It also has a forward multiple in the 20s. I think AMD is your second play. I think CEO Lisa Su, she's basically offering hyperscalers a negotiating weapon against the dominance of NVIDIA. And so I think if you're going to have a secondary name, my son, who's 14 today, happy birthday, Weston, has been long and not wrong all basically year in NVIDIA, up almost 100%. AMD almost up 100%. I think Intel, I see the pop. I think it's amazing that Intel finally got moving after 25 years, but I don't trust the culture, and I don't think AI is going to sit around for them to do a turnaround in their reorg charts. And so I think you have to go with what has the dominance and what is the player that's going to convince customers, meaning AMD, that they can be a second competitor and make margin at scale. I think the whole thing about NVIDIA is people are worried about their profit margins going away. When you have the whole stack like they do, I think it's going to be a fortress to make those margins to go down enough to make that stock not something you want to own longer term.
And of course, happy birthday, Weston, 14. Lee, you're too young to have a 14-year-old.
Oh my God, don't keep shining me on. That kid is a better trader than I was ever when I was a teenager. He just crushes me, it kills me.
Oh, that is cool. Just passing the torch. Jared, let me guess, you love Intel.
You know what? I am impressed with Intel. Let's go to the Wi-Fi Interactive. I'm going to show you the semiconductors heat map. This is what's going on today. I'm going to pull up a 5-day view. You can see that big red, that dark red rectangle on your left. That's NVIDIA. So on its earnings week, it's only down 3%, but it hasn't really catapulted to new highs just yet. Here's Intel up another 10%. I'm going to show you the year-to-date on this chart because a lot of people, when we saw this peak, and it doesn't look like much of a peak in January, kind of fell off from there. People discounted Intel. They said another left for dead story. It's a show me story, and they haven't shown us what we want to see yet. Never underestimate the power of a government put. And I think 222% year to date shows you what that power brings. Kind of reminds me of General Motors back in 2009 or whatever, when David Tepper went on TV. He's like, look, the government is behind GM, and they're not going to do anything crazy here. They filed with the SEC, and the government's going to do what they said they're going to do. It's a similar vibe here, and I think you got to pay attention to what Uncle Sam is investing in.
As for me, real quickly, I get out of the way before I get to Inez. I'm on Team AMD. I think Lisa Su is just, she's the bomb. She just gets the job done, and she has been doing so for a decade. Inez, over to you.
Yeah, well, I dressed up as Lisa Su for Halloween.
I know you did.
Anyways, but look, to the point of NVIDIA, I would say that just the fact their partnerships, all the companies that they invest in, every touch point of AI that they are involved in, I think that that's what's most impressive about NVIDIA.
I thought I was actually talking to Lisa Su right now, Inez.
Oh, excellent. Yeah.
Well, tell me about guidance there, Lisa Su. What's your quarter going to come out?
Oh, well, look, we are just going to crush it.
We got Big Friday energy here. Let's keep moving here. We got a question of the day? All right, let's roll with that. I will say it again. The U.S. consumer is confusing me. Toothpaste costs more. Lawn fertilizer costs more. Going out to eat costs more. Frozen food costs more. The cost to fill your SUV costs way more. Your Memorial Day weekend barbecue will cost more, even if you decide to trade down to chicken from pricey beef. And yet, top execs are coming on my show and saying people are buying discretionary toys and not pulling back much at all. What gives here?
I don't know that we've seen the full impact of higher fuel prices on goods just yet. The high-income consumer continues to spend with confidence into many categories. You can tell the low-income consumer, though, is more budget-conscious, more sort of navigating some of the financial distress that's out there.
Certainly, when you pull up to the gas pump, you are seeing those higher fuel prices. That is going to have an impact on that lower income consumer. But we did take a more recent test where we took an item, our Halo Glow Skin Tint, from $18 down to $14, and we saw a lift in that, a pretty substantial lift, almost 40% on that item.
The toy industry has grown very strongly the year, and this is on top of strong growth in 2025. It's an interesting period to see how toys continue to be resilient in challenging economic times. And we expect that to continue through the rest of the year.
You know, when the price of going out to dinner eclipses $100, when, you know, filling up your tank eclipses $70, $80, it's nice just to buy a fun thing from a fandom that you love, that's accessible and that you can show and brings you a little joy in your life.
Yeah, thank you to the YF team for putting that together. That's some real insight there. But just continuing this, I'm going to tap into my Alpha Space workstation right now. And I'm looking at Wal Mart shares. And Wal Mart shares have eclipsed or fallen below, you can see it right there in the chart, Alpha Space, fallen below the key 100-day moving average. This stock has gone really up and to the right for the better part of 5 years, but especially the past year. So this is a big technical violation. And Lee, I can't help but to think, was this week peak consumer? And I don't see how the second quarter and third quarter are going to look a lot better for a Walmart and a Target as consumers, as these higher prices settle in.
I just, when you hear those CEOs talk about the past and talk about the last quarter, I appreciate it. But you also had the ELF CEO say, hey, when we dropped the price from 18 to 14, we got lift, but not if you're not dropping the price. I think Walmart's a canary in the coal mine. I think it's not so much peak spending. I think we're at peak tolerance of these higher prices. And I think there's a certain sense of that people have that this war is going to be over soon, that oil prices have to just come right back down, just like they did back in 2022 with the Ukraine war. We went up to $5 gas. It started coming down. But I think we're going to have to wait all summer before we start seeing broad-based consumer pullback. Walmart said it best. They're the first people. They're seeing that bottom 60% of wage earners in America, and they are saying right now we're starting to see a little bit of slippage. So you get this all summer. You get people putting that $5 gas this weekend, right? But once you start getting in the fall and we don't have any movement on inflation, and if we get to the fall and we're not cutting rates, I'm not sure we're going to raise them, but we're not cutting rates, I'll tell you what's going to happen. That higher end consumer, the top 20, 30, 40, they're going to start getting crimped by higher rates, by that, BMW lease rate, by buying a new house. That's really when you're going to start seeing broad-based America say, hey, this is a little bit of a problem. But I think we're going to have to wait till, probably September to see the effect.
Jared, you're my technical guy, and it's important when a stock that has been on a long-term uptrend like a Walmart falls below the 100-day moving average. At least I think so. I think you would probably agree with me here. I love what Lee said about this being potentially a canary in the coal mine.
I believe it is too. Let's go to the Wi-Fi Interactive. I'm going to address both of those points. First thing I'm going to show you is our retail heat map. Now, this is since those March 30 general lows, and you can see Amazon here up 33%. Walmart is down 3%. That is a big red flag, and I'm going to show you the equal weighted view. You can see we got winners and losers, and a lot of the losers, look at Nike's on the bottom, down 13%. This is a rally where semiconductors are up, 70%, something like that. So there is an extreme wealth effect going on, and I agree. We're going to have to wait through the summer. If we keep going with this on-again, off-again war, we're going to see crude oil eventually hit $200. That's not going to result, we're not going to be able to maintain this status quo when we have $200 crude. Now, let me bring this back and show you the Walmart chart that I'm looking at here. So this is a 3-year. Yeah, we just cut below the 100-day moving average. That's a big red flag. We are still at the trend line here. This is a 3-year trend line still in place. Once that goes, that's my big warning there. Hasn't happened quite yet, but I'm going to be watching this like a hawk.
Cue Hindenburg omens. Lee, Jared, and our Dr. Lisa Su, played by our very own Inez Ferre. Have a wonderful weekend. All right, insert